Thank you for joining us for Cash is King with Pam Little. Pam is an accountant, CPA, working with small, medium, large, not-for-profit organizations. She'll be presenting some ideas for you for the somewhat long-term with the current situation we're facing. Before I pass it on to Pam, I just wanted to let you know a few things that's happening as far as events. We have this afternoon the Town of Ajax telephone town hall information that you can participate in. That information is on our website under event calendar. On Tuesday, we have what does it mean for employers and employees with Mathis Financial. And we have as well the economic impact in Durham with the region of Durham. I encourage you to look at check out our homepage for COVID updates on past recordings that we had for as far as the COVID situation and education, as well as updates on COVID, what the region, the city, and the town are doing. We encourage you to keep checking, as I said. There's events being posted regularly. Pam, over to you.
Okay, thanks, Sandra.
Thank you.
I think what we're going to do first of all is ask everybody to mute their microphones. And then if you do have questions, I'd like to answer them as we go. So, okay, put your questions in the chat and I'll try to answer them as I go. So first of all, thanks to the Ajax Working Board of Trade for asking me to host and plan this webinar. What we're going to try and do today is take a look at where your money is coming from, where your money is going to, and hopefully we'll be able to balance the two. And then you'll have a good plan moving forward to make it through these difficult times. Okay. So the slideshow is really just to kind of keep me on track, and we're going to go interactive with the spreadsheet that I believe you all should have a copy of, so you can follow along if you would like as well. Okay. So we're going to start with where is your money going, because that's really going to give you a baseline to know how much money you need coming in, right? If you don't know what all of your expenses are, then you don't know how much money you need to be able to cover off those expenses. So you may have things like prior commitments. So these would include if you've, my gosh, your rent, sorry, I'm just going to grab my notes. So prior commitments, if you've made any purchases that haven't come in the door yet, but you need to pay for, if you've bought inventory that you're going to sell, so that would be a prior commitment. So that would be your accounts payable, right? Anything maybe that even has come in the door, but that you need to pay for still, right? Maybe you're on a net 30 or a net 45 days. You might be coming up to the time now where you need to pay those bills. Okay, so what you can do with that, and if you were in on the webinar last Friday, I believe it was, there was a really excellent flow chart showing you what you can do with some of these things. So for your accounts payable, maybe you can contact your vendors, and I mean, everybody's in the same situation, everybody understands, and see if you can get those terms extended. Right? So try to even talk to your landlord and see if they can extend or defer payment on your rent, or, you know, give you a little bit of a break. So you need to be doing these types of actions now, and probably for the next, you know, month or so, to try to get, I guess, your payables down as low as you can, right? So your other items, your fixed costs, so those, if you have a facility, that would be your rent, your heat and hydro, your water bill, if you have a water bill, if it's not included in your rent, Those types of things are your fixed costs. They don't change month over month. Your telephone bill could be another one. For those types of costs, you may not be able to get any relief at this time. I know the utility companies are reducing the rates for the hydro anyways. So that's something to think about too. Okay, and then your government remittances. So the government has offered to delay HST payments to September 1st. They are offering the 10% wage subsidy, which comes into effect now. So with your April 15th remittance, which is coming up, you're able to reduce that by 10% of the gross. And then there are stipulations on that, how much you can actually deduct. So that's something that you can take into effect now. Other government remittances are income taxes. So corporate income taxes are also deferred to September 1st, and personal income taxes are also deferred to September 1st. Okay, so if we take a look, there's also the other payroll wage subsidy that the government has offered, and that's the 75% of the gross for 3 months. Okay, I haven't quite updated this yet. Maximums have been identified. So the website link that's in here it's updated constantly. So all of the maximums and terms and conditions, I guess, of these government programs will be listed on there. Okay. So let's flip over to the spreadsheet. Andrew, can you see my spreadsheet?
Yes, I can.
Okay. Okay. So let's just take a quick walk through the spreadsheet. So your starting date would probably be March or April 1st. Okay, and then these dates will all populate. And honestly, you can do this by month. You can even do it by week, just by changing these dates, right? So maybe you need a weekly forecast. Maybe you need to know weekly, you know, where your money is going to be. Okay, and for those small business owners that maybe work from home, you can use this as well, even for a personal budget too, right? So if you've got personal commitments that maybe aren't part of the business, but you still want to be able to see how you're going to meet those commitments, you can use this spreadsheet as well. Okay, so your cash balance alert, so that's going to be a number that you choose. So say if your cash goes below $1,000, you may find like that's kind of your breaking point, and the point where it's like, okay, I need to do something to get more money in the door. Okay, so let's put April 1st in here. Let's do it that way. There we go. And then our cash minimum balance alert is going to be $1,000. Okay. So in the first cell, we're going to put our cash on hand at the beginning of the month. So this is the cash that you have in your bank right now. So let's say we have $5,000 in the bank right now. Okay, we're going to flip down to the cash out, because that's what we were discussing right now. So you're going to populate things as they would be in the normal world. Okay, if you were to carry on business without COVID-19, so your things that are going to stay the same, your bank service charges are always going to be there. Okay, and we can populate this across. Things that might not be there, delivery and postage. If you are still shipping goods, fantastic. Put your shipping costs in there. Dues and subscriptions that may not change. For example, if you're part of an association. So for example, me, I have my dues coming up in July, and that's $1,000. Okay. Insurance, business insurance is probably paid once a year, or it could be paid monthly. So that's something that's really not going to change. Now you may be able to work out some deals with your insurance company to defer payments. But again, remember, these are deferrals and they will have to be paid eventually, right? So let's say my insurance is $200 a month, but my insurance company says, yes, we'll defer it to July. So there would be 3 months of payments there. So there's going to be a $600 payment that's going to come out. Okay. Discretional costs like meals and entertainment, chances are you're probably not taking clients out. So those are things that would not be of the norm, and we can skip those. Mortgage interest is something, I know some of the banks are making deals to defer the mortgage interest payments. Let's talk about your employees. Where is salary and wages? There we go. So I think this is really a big question for most people, is the wages. Can we afford to keep our employees on and get the 75% subsidy? Or do we have to lay staff off? And it can be both. It can be you keep some staff, but lay some staff off. If you're a business that has shut down completely and has absolutely no income coming in, this probably isn't an option for you. But for those that are still able to carry on business, I think this is going to be the big deciding factor. You might want to add an additional tab on here to figure out your staffing. So if you've got 4 employees and you know they cost you what, $8,000 a month. So let's put that in here. 8,000. So we can play with that number in here and say, what if we keep 2 and lay 2 off, and we'll see what that looks like when we get to the cash in piece. Okay. So some of your other expenses, just, try to fill it out as best you can with information that you have. Again, your costs that are constant are going to be the ones that are going to stay the same as business as normal. And then your other costs, dues and subscriptions, delivery and postage, those are the things that will be discretionary, that will change with your change in business. Okay, let's see if I can flip back over to the other screen. Are there any questions at this point?
Nothing open at this point. Yeah.
Okay, thanks, Sandra.
Okay.
Okay, cash in. Where is your money coming from? So we want to look at, first of all, who owes you money. Do you have any accounts receivables right now? Any work that was maybe finished up in March that's coming due in April? You need to get on the phone and talk to those people and see if they can pay you, when they can pay you. Remember, they're in the same boat as you. They may not have cash coming in either. So, try to work with them and try to work out some kind of a payment plan with them. And then do follow-up calls. If they say they're going to pay you in 10 days or 20 days and you don't see the money coming in, call them and just ask them. Maybe something didn't come in that they were expecting. So current commitments. So if you're a production facility and you have something that's in production right now, that's going to go out the door, make sure that your customers are still willing to take delivery. You don't want to be producing goods, or even if you're a wholesaler or a retailer, you don't want to be purchasing goods and then having it sitting there. Inventory costs you money. So check with your current open purchase orders and see if they still want them to be fulfilled. Okay. So funding sources, the government programs that are available, there's quite a few right now. So some of them are the 2 wage subsidies. The other one is a $40,000 interest-free loan in connection with the BDC and your bank. If you don't have a BDC contact, you can go through your bank. And those loans are payable in a year. And there are restrictions and stipulations on those as well. So make sure that you look into those and see what you can find. There are some other loan programs available, and that link that was on the previous slide should connect you to those as well. Reinvent yourself in your business. You know, in these times, it's maybe hard to carry on business as you normally would, and maybe it's time to look at other ways that you can change your business or do your business a little bit differently. I have a client that owns a gym, and in order to keep her customers engaged and in order to keep her customers happy and feeling like they're getting value for their gym membership, she now offers online training and online coaching. They're offering online classes. So, you know, she's really had to think of ways to do business differently. And maybe you can do that with your business as well. I don't know if you were on yesterday with Robert Weiss, but he kind of went through that same thing. You know, maybe it's time to look at doing things just a little bit differently. So some of the government programs, the CERB, I'm sure everybody's heard about it by now. I know everybody's been talking about it. So it is available to people who are not normally eligible for EI. So those are self-employed people. Those are people that own corporations drawing a salary that now, you know, they're not eligible for EI, but the corporation is now not making any money. So they're eligible for the CERB as well. The extended deadlines to pay income taxes, we already spoke about that. And then the business credit availability program. So part of that was that $40,000 interest-free loan that's available. Okay, let's flip back to the spreadsheet. I hope I'm doing this right. Okay, is that the same spreadsheet that's populated, Andrea?
Yeah, you're good. You're good.
Okay. Okay, good. So the cash coming in. So our collections on accounts receivable. So that's where we're going to put in. You know, you're spoken to your customers, and so one customer is going to pay you $1,000 in May. And then maybe another customer is going to pay you $4,000 in June, and so on and so forth. So that's how you would populate that piece. Loans and proceeds. So that would be the government loans that are offered. So maybe you applied in April and you're going to get that $40,000 interest-free loan in May. Okay, owner contributions. So that is, you know, if you do have savings at home and you're going to use them and inject them into your corporation or your small business, just to keep things afloat and to keep things going. So let's say you're going to contribute $5,000 of your own money. Okay. So now, if you're lucky enough to still be earning income and selling and having money coming in, you can put those totals on these lines, and you can change the names of these headings. They don't have to stay the same. So let's say you're maybe doing a little bit of consulting on the side. Maybe that's not your main business, but it's what you're doing to earn some income. And for that, it's $1,500 a month just for the next couple of months. Okay. Oh, we're doing pretty good. Maybe we have more employees. Maybe we don't need the full 40,000, right? Maybe we only need, and this is where you can play with the numbers, right? So in this case, if this person was to get the 40,000, they would probably be able to keep their staff of 4 employed. Okay, and if they do that, we can change some of these because we need to take into account the 10% wage subsidy, which is 10% of the gross. Okay, but I'm not taking into account the maximums or things like that. I'm trying to keep this simple just for this demonstration process. There is a question for something like loan proceeds. Say I have received it in May, but I don't plan on using all of it. That's a good question. So yes, you would put the full 40 in May, even if you're not going to use it all. This is kind of on a cash basis. So when you receive the funds is when you want to recognize it here. Okay, and the same would be true of your regular financial statements as well. When you receive the cash is when it goes into your bank account, for one, right? So you're going to recognize the full amount. Okay, that will also help you to see how long the 40,000 is going to last you as well. Even if I plan on putting 5K of the 40K into each month. Let me just make sure I understand, Jessica. Are you saying that you're going to kind of put it into a savings account and then bring it into your operating account, $5,000 each month?
Hi, Pam. Yeah, that's exactly it. That's what I'm trying to say.
Okay. Okay. So you could do it that way. You could do it that way.
Doesn't operate that way.
Well, sorry?
I said, I guess the average business doesn't really operate like that. It would go into the main account and then figure it out from there. I just feel like it makes the other months kind of look, well, I guess the 40K is still there. Whatever's remaining of it will still. Now, yeah say that, for example, will all the other numbers adjust? If you enter 40K under May, is it going to show only so it's going to show that you ended up plus, say, X amount of dollars in May, but then all the other months were in negative?
Well, what happens is all we're really worried about with the spreadsheet is the cash on hand, right? So if we take a look at the cash on hand, we can see that $40,000 is going to last us till November.
Now, when you say cash on hand, do you mean cash that, like, physical cash that is available, say, like in a till, or do you mean cash on hand as in the available balance in the bank account?
It would be a combination of both, actually.
So the total cash available.
Yeah.
Okay.
Yeah.
Okay, that helps. Thank you very much.
Okay. Okay. And if we were to take this 40,000 and split it until it totals 40. One more. There we go. Oh, actually, Jessica, that's interesting because now look at, see, okay, I don't like doing it this way. Sorry. Because you truly have the 40,000 available to you on the day that it comes into your bank account, right? So bringing it into the business slowly might not work in this case. As we can see, in September, we now have, well, sorry, October, we've got negative cash. Does that make sense to you, Jessica?
Whereas if you put the 40 in May, did it stay positive? Like, it's like we're pretending to use the full 40, right? It's still, there's still something left over.
Yeah, so with the full 40, We need to deploy it sooner than the 5,000 per month, right? So you're gonna have to.
I misunderstood. I was thinking the picture would look more positive having split it up, but now that you've entered back the 40K, we can see it's more positive this way.
Yeah, yeah. It just means that you're going to use it faster than probably what you anticipated. Okay. The 10% wage subsidy, let's carry this across. Oh, it only goes 3 months, I believe, to the end of June. And then we can call this one the 75% wage subsidy. So if we were to keep all the employees on, and it is 75%. No, it didn't like that. And that too is available for 3 months. Okay, so that helps out the cash flow a little bit more with the 40,000, keeping our 4 employees, applying for these, applying for the 75% wage subsidy, which you do have to apply for. The 10% wage subsidy you do not have to apply for. You just apply it immediately to your remittance payments. So now we can see the 40,000 is going to help carry us through to the end of January. Okay, now we haven't taken into account in here any new sales going forward. And that's going to be up to you, you know, to kind of figure out when you believe business is going to get back to normal and when your sales are going to ramp up to their normal levels. Okay, and you would put those in this row here. Okay, along with that too, the expenses, you're going to, if you believe in, I don't want to say November, let's say September. Let's say in September things start going back to normal, you're going to put in these columns your normal operating expenses where you were before COVID-19. Okay. Any questions on the spreadsheet at all?
I have a question again, Pam, here, sorry.
Yep.
Under cash income, does the average business split up their income into 2 different or multiple streams? Like say, for example, if you have a mechanic, you know, we would make money off the labor, the mechanic's labor. We would also have a parts markup margin, you know, those different categories. Would you split it up? Or someone that sells products, would they split it up into product 1 and product 2 if there's 2 main products? What does that normally look like?
Yeah, so for your example, for the mechanic, I would definitely split my income between labor and parts. And then you're going to split your cost of sales between labor and parts as well, because you really want to see in the business model, you know, how much money you are making on your parts and how much money you're making on your labor. So, and for a retail, they might split up, what's a good example? I don't know, Canadian Tire is a good example. So they have so many different departments, right? So they've got housewares, they've got automotive, and then they've got automotive repairs. So they would definitely split up their revenue streams and then do their costing the same, because you want to make sure that each department is earning you money, right? So if a department isn't, then you need to look into, and this is beyond COVID-19 now, but you want to see that each department is earning you money. And if it's not, then you need to investigate why. Is it a viable piece or part of your business? And is it something, you know, do you need to raise prices? Do you need to cut back on labor? Do you need to, maybe your labor force, in the automotive example, maybe your labor force needs more training. Maybe they're taking too long to do an oil change, right? So then you can help ramp up that part of the business.
Just curious.
And last,
Sorry,
oh,
go
sorry,
ahead.
go ahead.
No, go ahead, Jessica.
I was just going to ask, when it comes to cost of goods sold, I think a lot of times for, individuals or businesses that sell a variety of products, it can be difficult to know or to track rather, the profit margin on each part. So if we, for example, follow a model where it's like we purchase something at $1 and we charge $1.72, or we will mark up our parts 1.72 as an example. Can we just put an average under costs of goods sold for parts based on what we received in terms of income? Or like, how would someone who uses a normal invoicing system like QuickBooks or, your cost versus what you're retailing the product at is not always so straightforward. So how would you show that?
Right. So in QuickBooks, it has a fairly decent inventory control system. And for each inventory item, you're going to have the cost, what you purchase it at, and you're going to have what you sell it at. And it should be true. It's not just a markup percentage, because what happens if the cost of that product goes up? So you want to make sure that you're capturing that. And then at the end of the year, you would do an inventory count, okay, and you're going to compare that to what's on your balance sheet in the inventory. You may have lost items, stolen items, so you need to account for those types of things at the end of the year usually.
Okay,
did that answer your
that
question?
definitely.
One
Yes,
quick thing,
thank you.
Pam, just in listening to Jessica, I guess you would have to factor in as well that even if things are back to normal by September, if you're in, for instance, in the auto sector or mechanics, as Jessica, I think that's the sector you might be in, you'd have to factor in that if somebody has not, even when you mentioned going back to the regular, what your regular time, would be happening around that time of the year, I guess you'd have to factor in though that for somebody like her, that somebody is not, that people may not need to get their car done this summer because they haven't been driving it. So I guess there's factors that you look at that, how that would have affected your normal course of business. Right?
You know what, Andrea, that is such a good point. So yeah, there are going to be things, okay, for the automotive, like you said, maybe they won't need to get the oil change done when they normally do. But then there's the opposite of that too. People might not be getting their snow tires taken off because they don't want to risk, right? So now all of a sudden Jessica's going to get an influx in, I don't know, August or September of people who need to finally get their winter tires taken off. Yeah. So, there could be a little bit of give and take. So maybe things don't go completely back to normal immediately, and that's something that you have to try to forecast and try to figure out. And I know forecasting really is it's difficult, and it's all a guessing game. That's really truly budgeting, forecasting, the cash flow. They're guessing games to see, this is what I think is going to happen, and then you would compare that to what truly happened. Right. And the more that you do budgeting and forecasting, the better you get at it, the more you're able to predict what's going to happen in your business. So it is actually a very important piece of your business and your business plan.
Pam, sorry, last question on that note. At the end of the month, should we have like two versions of the same document where it's like what we projected versus what we actually achieved, so that we can see how far off we are or how we should project next year?
Perfect, Jessica. Yes, definitely. So yeah. So keep your accounting software should be able to provide you with the actual numbers, and then you can do a comparison. And actually, QuickBooks has a budgeting tool within it, depending on which level you're at with QuickBooks. Not which level, but sorry, which version you have of it. So you can put your forecast numbers in there, and then you can pull reports directly from QuickBooks, actual versus budget. Makes life a little bit easier.
Any other questions? Okay.
I'm going to flip back over. There we go. There's my contact information if anybody has any further questions. If you do have questions on any of the programs, the government programs, please give me a shout or send me an email and I will answer your questions. I don't have the answers right at the top of my head right now, but I will definitely look things up for you.
Wonderful.
Pam, where would we include payroll? I was just looking back. I don't know if I missed it, or would we put that under cost of goods sold, technically the labor?
So down on line 56.
Oh, I missed it. Thank you.
That's okay. That's okay. You know what? We didn't. Go over was where to put in your accounts payables. Let's flip back over for a minute. Did that flip over?
Yes, it did.
Okay. I don't know what you guys are seeing. This is so funny. I feel like I'm flying blind. Yeah, so we talked about receivables, right? But we didn't talk about our payables. And they go in, where are payables? Accounts payable. Yeah, so you would put in payments that you make to your suppliers or your other creditors down here. So let's just say we do 500. And that's not changing that number. Why isn't it changing that number? Well, I'm stumped now. That should have changed that number. What if we put $1,000 in here? No.
Pam, will that cash flow projection sheet populate automatically? The graph?
Yeah.
Okay.
Yeah, so these populate automatically. These are totals. Anything that's grayed out is a total column and will add up automatically. Okay, and then there's this handy dandy chart that shows you if people are a little bit more visual than looking at all these numbers, which I know some people are. So this shows you, you know, we had that 40,000 injection of cash, so we're all good, and that's going to last us. And then we get down to January, and now all of a sudden we're in the red. Okay. And that red line is that alert number. So when you get below that $1,000, and we can change that. Let's change it to 10,000 and see what happens. Well, we're starting not off so great. So there we go. So that cash on hand changed. So this is when our cash gets below $10,000. Now we know that we need to inject some more cash into the business to keep afloat.
Sorry, Pam, I'm going to ask another question of you because you're very, very helpful. With that red line, should we make that equivalent to the same? I guess not. I'm trying to think, how would I know? It's great to see the graph, but what are my monthly expenses? Should I draw another line if I know on average I need 30 grand a month to operate the business? Should I draw a black line through the graph, or
so that's what you would keep your cash balance alert minimum at. So if your rent and your payroll come to $10,000 a month, then that's going to be what that cash alert is, right? So, and I'm using,
like, if someone says, hey, what's your average monthly expenses? And I know it takes 35 grand between payroll and rent, but also everything, utilities, like what's the total number that I need every month? Because then if I know what the projection is versus what my budget is, I know what my gap is. So I'm trying to come up with, at least I have to generate a minimum of 10 grand in order to cover my expenses, and then extra if I want something left over.
Yeah, totally. So, and you're right. So it would be all your fixed costs. So your rent, your payroll, your heat, your hydro, your telephone, your internet, things along those lines. Those are going to be your fixed costs, and they are going to stay the same. So you're right, you probably want your cash balance alert to be, you know, this is how much I need in the bank to run the business at bare minimum. So that's what we're going to keep that cash balance alert at.
Okay.
Okay. Anything else? I know it's a rather dry topic.
It's helpful, not dry. If you need the help, it's there. It's
Yeah, yeah. And if anybody needs help after the fact with the spreadsheet, please feel free to reach out. I'd be more than happy to help.
okay.
I think we all need to help each other in these times, right?
Do you do personal as well as business, Pam?
I do. So a little bit about me, I guess. I'm a chartered professional accountant. I've had my own practice for 8 years now, I think. And I do personal taxes, corporate taxes, bookkeeping, and then we also do like strategic planning and like these types of forecasting and budgeting with clients as well. Okay. Oh, I'm in Pickering. I'm beside the GO train in Pickering, if that helps. I am still in my office, you can see. But the office is shut down. I'm the only one working here. The others are working from home. So I'm not seeing clients. Nobody's coming in. We have a complete portal system set up. So everybody can drop their documents into the portal. It's secure. It's a Canadian company. Everything's stored in Canada. And then I can pick up the documents, and then I drop documents in there for you for signature and vice versa. So we can share everything very easily.
Wonderful. That's it,
Okay.
Pam? That's it?
Yeah, that's it.
Any other questions? Okay. This recording, we have recorded this event. This and all the webinars that we're putting on will be added to our homepage under the COVID section. As soon as you go to the website, you will see that. Ajax Pickering Board of Trade, apboardoftrade.com. So ajaxpickeringboardoftrade.com. You will see all of the pre-recorded sessions are available for you as well. Check back there for all of the events, community happenings, and if you have questions, please reach out to us. Our contact information is also on the homepage. Okay. Thank you all for attending, and thank you very much, Pam. Great session.
Okay, thank you very much, everybody.
Have a great day, everyone.
Bye.
Bye.
Thanks.